Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's dive in. We begin our review of the global economy with key releases in the US, Europe, China, and Japan. Volatility in the US stock markets rippled through global markets as investors reviewed key economic updates. Investors were encouraged after the Federal Reserve held its key lending rate steady for the 8th time in a row, but also sent a signal that a rate cut cycle could start in September. But that rate cut-induced market rally turned into sharp losses after a private survey indicated factory activities contracted third month in a row in July, and non-farm payrolls expanded at a slower pace, or rather slower than expected pace in July. Job openings also tightened, indicating that job market is healthy, but available pool of jobs is shrinking. The sudden reversal in economic backdrop caught investors by surprise, and weak earnings from big tech companies also contributed to sharp sell-off on Wall Street, which quickly spread to global markets. Investors speculated that Federal Reserve may have kept rates high for too long and U.S. economy may face recessionary conditions before inflation drops to the 2% target set by policymakers. European markets also fell amid growing worries of stagnant domestic economic outlook, compounded by possible weakness in the U.S. and persistent deflation worries in China. The Eurozone inflation rebounded in July, stoking speculation that additional rate cuts are less likely at the next policy meeting. The Bank of England delivered its first rate cut for the first time in over 4 years. The policy committee lowered its policy rate by 25 basis points to 5% after keeping rates at a 16-year high of 5.25% since August 2023. In other economic news around the world, the Eurozone's GDP growth in the second quarter was 0.6%, and the German economy contracted, but Spain led the largest four economies in the currency union with an increase of 2.9%. The Bank of Japan unexpectedly raised its policy rate to 0.25%, largely to reverse the yen's recent decline. Foreign direct investment flows to China in the first half plunged 29% from a year ago, reflecting rising geopolitical tensions. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury fell below 4% for the first time since February after a string of economic reports signaled weakening economic conditions. Crude oil prices declined 4% to below $73 a barrel and fell for the fourth week in the hopes that weakening economic activities may reduce demand for energy despite elevated supply concerns. Natural gas prices in Europe jumped to an 8-month high of 40 euros per megawatt hour as traders weighed rising tensions in the Middle East that could lead to supply disruptions. The euro stabilized near $1.09, benefiting from the general weakness surrounding the US dollar. The yen strengthened to 149 against the US dollar after the Bank of Japan unexpectedly raised rates, surprising currency traders and forcing hedge funds to unwind yen-based speculative trades. We now shift our attention to major stock markets in the US, Europe, and Asia. The S&P 500 index and the Nasdaq Composite fell for the third week in a row after recession worries outweighed possibility of starting the rate cut cycle as early as September. European markets extended losses in the third of the last 4 weeks, tracking losses on Wall Street as investors worried about the impact of weakening U.S. economic conditions. The Nikkei 225 stock average extended losses to the third week in a row and dropped a whopping 17% from the July high, deepening the market sell-off and dropping to the level last seen in January. The single-day decline on Friday was the worst since 1987. Hong Kong indices extended losses to the third week and erased this year's gain after investors dialed back hopes of supportive measures from policymakers following a vague announcement after the Politburo meeting. Indian market indices halted an 8-week rally following the global market sell-off as investors reviewed the latest batch of positive earnings. Let us shift our attention to merger deals, market movers, and earnings updates from leading companies last week. Apple reported better than expected quarterly results and sales hit new highs amid rising sales in India. Meta Platforms soared 7% after the parent company of Facebook and WhatsApp reported higher than expected quarterly results. Amazon.com dropped 12% after the online retailer and cloud service provider reported weaker than expected second quarter revenue and and issued a disappointing estimate. Microsoft reported better than expected results, but cloud segment growth fell short of the market expectation. Intel plunged 29% and dropped the most in last 5 decades after the advanced chipmaker reported weaker than expected second quarter results, announced job cuts of 15,000 or 15% of its employees as part of a $10 billion cost reduction plan. ExxonMobil reported better than expected quarterly earnings, driven by record energy production in Guyana and Permian Basin. Chevron reported weaker than expected second quarter earnings due to weak crude oil refining margins. HSBC Holdings reported stable earnings and announced a $3 billion stock buyback plan. Airbus jumped 4%, and the aviation company reported better than expected first half results. BMW reported a decline in revenue, earnings, and deliveries in the second quarter, and the company estimated a slight decline in fiscal year earnings. Rolls-Royce jumped 9% after the British Aerospace and Defense Company reported higher profit, raised its annual income outlook, and held out for dividend reinstatement later in the year. BP plc reported better than expected second quarter profit, and the company reiterated its plan to buy back its stocks and increase its dividend. In the week ahead in the U.S., all eyes will be on the fresh batch of earnings, including updates from Amgen, Caterpillar, Disney, and Uber. On the economic front, the service sector activity report is likely to show a rebound to growth in July after a contraction in June. Investors are also awaiting the release of international goods and service trade balance and changes in deficit with China, which will take the center stage. German factory orders and industrial productions are likely to show a rebound, and final inflation data is expected to confirm acceleration in July. In the Eurozone, investors are looking forward to the release of retail sales and producer price index, industrial production in Spain, unemployment rate in France, and inflation update in Italy. In Asia, China is set to release its international trade data. The Reserve Bank of India is set to hold interest rates steady, and the minutes and the summary of opinions of the Bank of Japan's policy held in June and July, respectively. You can review daily U.S. and global financial market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on Redera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see you next